They say money cannot buy happiness, but lacking money actually buys you a lot of extra bills. It sounds like a total contradiction, but the reality is that being broke is incredibly expensive today. Welcome to the poverty penalty, where everyday survival costs significantly more when your bank account is empty. Today we are breaking down the hidden math of why struggling financially drains your wallet even faster. You might think rich people spend the most money, but broke people pay a higher percentage penalty. From groceries and banking to transportation and housing, the system inherently charges you a massive daily premium. Think about it carefully. When you have no safety net, every single financial choice carries a fee. Let us look at the banking system, which essentially punishes you for not having enough cash available. If you drop below a minimum balance, the bank immediately slaps your account with a monthly fee. You are literally paying the bank your hard-earned money simply because you do not have enough. Then comes the dreaded overdraft fee, where a small coffee suddenly costs you an extra $30. Last year alone, big banks collected billions of dollars in overdraft fees, mostly from low-income accounts. If you cannot get a bank account, you must rely on predatory check cashing services every payday. These businesses take a percentage of your paycheck just to hand you the money you already earned. Over a year, those small percentage fees add up to hundreds of dollars, completely vanishing into nothing. Without access to traditional banking, building a good credit score becomes another massive obstacle in your way. A low credit score means lenders view you as a high risk and they charge you accordingly. When you try to finance a car or get a personal loan, your interest rate is astronomical. A rich person borrows money at 3%, while a broke person pays well over 20%. This forces people into the trap of payday loans, which feature interest rates reaching 400%. If you take out a payday loan just to survive, you always end up paying back double. Now let's talk about housing, which takes up the largest chunk of a tight monthly budget. Homeowners lock in a fixed mortgage rate, slowly building equity and wealth with every single monthly payment. Renters, on the other hand, face annual price increases while building exactly zero equity in the property. Moving to a cheaper apartment sounds like a smart plan, but the upfront costs are incredibly high. You need the first month of rent, the last month, a security deposit, and sometimes broker fees. Since broke people can't afford those massive upfront costs, they remain stuck in overpriced, poorly maintained apartments. Even paying basic utility bills becomes a major financial penalty when you're struggling to make ends meet. Missing a single payment means getting hit with late fees that immediately push you further into debt. If your electricity gets disconnected, you must pay another hefty connection fee just to turn it back. Getting to work is another major expense that actively drains your wallet when you're completely broke. Buying a reliable, newer car is impossible, so you settle for a cheap used vehicle instead. That $1,000 car seems like a great bargain until the transmission fails 3 weeks down the road. Suddenly, you're sinking hundreds of dollars into constant repairs just to keep the old car running. Over the course of 5 years, that cheap car actually costs more than a brand new vehicle. Furthermore, your low credit score guarantees that your monthly auto insurance premiums will be significantly higher everywhere. If you abandon cars and rely on public transportation, you end up paying heavily with your time. A 20-minute drive easily becomes a grueling 2-hour bus commute that drains your total energy. That lost time is time you could have spent working extra hours, building skills, or simply resting. Time is money, and being broke actively steals the precious time you need to improve your situation. Now, let us examine how buying food is vastly more expensive when you live paycheck to paycheck. People with disposable income head to warehouse clubs and buy their household groceries in massive bulk quantities. They purchase a giant pack of toilet paper that ultimately costs 20 cents for every single roll. Broke individuals cannot afford a $50 pack, so they buy a single roll at the store. At the convenience store, that exact same roll of toilet paper costs them an entire dollar instead. Because you totally lack the upfront cash to buy in bulk, you pay 5 times the price. The same ruthless logic applies to groceries, especially if you happen to live inside a food desert. Without easy access to large supermarkets, you are forced to buy overpriced processed foods at local shops. Fresh produce is rare and incredibly expensive, making healthy eating a luxury that you simply cannot afford. A terrible diet eventually leads to severe health problems, which brings us to the next massive expense. When money is incredibly tight, basic preventative health care is the very first thing that gets completely ignored. You simply cannot afford to visit the dentist for a tiny cavity, so you just endure pain. A year later, that minor cavity turns into a severe infection requiring an extremely expensive root canal. A simple $50 filling suddenly becomes a massive emergency dental procedure that destroys your monthly budget. Without good health insurance, avoiding the doctor is a survival tactic until an absolute emergency finally strikes. When that inevitable emergency happens, a single trip to the hospital can result in lifetime medical debt. Even if you manage to secure cheap insurance coverage, the annual deductibles are usually impossibly high anyway. You pay monthly premiums but still cover everything out of pocket because you never reach that deductible. In the end, you are absolutely terrified to use the medical insurance that you are actively buying. It is a vicious cycle where saving pennies today guarantees you will lose thousands of dollars tomorrow. This perfectly illustrates the famous boots theory of socioeconomic unfairness created by the brilliant author Terry Pratchett. A rich man buys a sturdy pair of boots for $50 that will last 10 years. A poor man can only afford a $10 pair of boots that quickly leak and break. He must buy a new $10 pair of boots every single year to keep feet dry. Over 10 years, the poor man spends $100 on boots and still has wet feet. The rich man spent half the money and enjoyed comfortable dry feet for an entire decade straight. This exact theory applies to almost everything we purchase, from winter coats and kitchen appliances to furniture. Buying cheap goods is a luxury that only people with absolutely no other financial options can afford. You constantly replace broken items, spending drastically more money over time than if you bought quality once. But you cannot buy the quality item because you never have the large lump sum of cash. Even the government tax system makes it significantly harder and more expensive when you are completely broke. Wealthy individuals hire skilled accountants to find brilliant loopholes, deductions, and strategies to minimize their tax burden. Low-income earners must navigate confusing tax codes alone or pay expensive services to access their refunds. Many rely on rapid refund services, losing a massive percentage of their tax return to hidden fees. When you finally get a little bit of extra money ahead, the system finds a way instantly. Let us talk about simple mistakes, like missing a minor toll charge or receiving a parking ticket. For a wealthy person, a $50 parking ticket is merely a minor annoyance and quickly forgotten. For a broke person, that $50 ticket might mean choosing between paying fines or buying groceries. If they can't pay immediately, the fine doubles, then triples, eventually leading to a suspended driver license. Now they cannot legally drive to work, putting their entire livelihood and income in serious immediate jeopardy. The true cost of being broke is not just financial, it's a heavy psychological and emotional burden. Constant financial stress dramatically reduces your cognitive bandwidth, making it incredibly difficult to plan for the future. When you are focused entirely on surviving today, you literally cannot afford to think about next year. This chronic stress leads to poor decision-making simply because your brain is overwhelmed by survival threats. You might buy an expensive coffee or a fast food meal just to feel a moment of joy. Critics call this irresponsible spending, but psychologists recognize it as a necessary coping mechanism for severe stress. Poverty completely strips away your margin for error, turning tiny mistakes into catastrophic, life-altering financial disasters. The entire structure of modern society is unfortunately designed to penalize those who already have the least. It takes money to save money, and it takes extreme privilege to avoid the hidden poverty taxes. Breaking out of this devastating cycle feels like trying to sprint a marathon while wearing heavy chains. So how do you actually escape a system that aggressively taxes you just for being financially vulnerable? It starts with brutal awareness, identifying all the hidden fees and predatory traps draining your bank account. Build a tiny emergency fund first, even if it means saving just $5 every single week. That small buffer can prevent a minor overdraft fee from spiraling into a massive, unmanageable financial crisis. Look for community credit unions instead of massive corporate banks to entirely avoid those ridiculous monthly charges. Prioritize buying lasting quality over temporary cheapness whenever you manage to scrape together a little extra cash. Being broke is mathematically expensive, but recognizing the specific traps is the very first step toward freedom. Have you ever been hit by the poverty penalty? Share your absolute worst hidden fee experience below. Give this video a like if it opened your eyes, and subscribe for more deep financial dives. Remember, wealth is built through knowledge, so keep learning, stay aware, and I will see you next time.